Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, March the 1st, 2023. Again, it just continues to present very interesting days, it being the markets, of course. And today is just being added on to this string, this battle, it seems, that many are having within the market. And they're battling over where and what levels are going to be reached at what time. And that's really, in my opinion, what it's breaking down to. But more importantly, there are times in this trading day when moving in and doing positions and trading has produced some very favorable results. And it's beginning to move a little bit around the different asset classes that we have. Like we have treasuries, we have gold, silver, we have equities, we have other commodities, and individually there are pockets within all of these that are presenting very stable and solid, good trades, profitable trades. That's really what I meant to say. So I'm going to start again with the S&P and the NASDAQ here. I'm going to try to add a little bit about the bonds, because the bonds really did in the morning. We had the Fed governors, two of them, go out early, get up on the stump, and each had different things to say. And the markets took it to heart, primarily because we saw some strong activity pop up in the Fed funds in the months going out, not necessarily March, but we were looking at April, May, June, July, etc. As you move out and you start to see this activity that the Fed fund itself is being sold, the rate is going up, the yield is rising. And it did it very rapidly this afternoon, or actually it was this morning. And so I want to mention that because, again, it feels often that the equity markets are just not catching on. And one reason I do think that this remains prevalent is that much of what happens in the first 2.5 hours within our market is kind of being reflected between us and with Europe. We got Europe coming in, you got different things happening, and everybody's making adjustments. And outside of that, a lot of it is already pre-programmed. So in other words, it's like we have algorithms, they're fed their marching orders, and boom, they're enacted. They're sent off to do at particular times to process orders. Also, just we have all the options trading, et cetera, et cetera. So there's a lot of activity, and a lot of it can be in a dichotomy against what we know to be truly happening. In other words, outside of all of this. Now, coming inside, these opportunities are there every day, and they don't always last. They could be momentary. They could be 15 minutes. They could be an hour. They could be the whole day. But we're rotating through a lot of, I don't want to call it change, but just trading. But what is changing is that positions are changing. A little bit more moves over to this side, a little bit more moves over to that side, et cetera, et cetera. And that, and again, is presenting opportunity. So beginning here with the S&P, there is not much to be talking about in terms of what actually is happening to what we're still looking for, or what I can eliminate and put support behind. Everything remains the same. So let's start here on the S&P. Again, intermediate wave B finishing up on Valentine's Day, actually. And in my opinion, ended in a failure. The final legs of it, the minute fifth wave to complete the C wave. So basically it was the minute fifth wave that failed, but it did complete a minor C and then an intermediate B. Out of that, we've begun an intermediate C wave down, which will consist of 5 waves of minor degree. What we have so far is minor wave 1. We're still just kind of dawdling around, just kind of fooling here in this minor wave 2. And so minor wave 2 is going to consist of 3 waves labeled A, B, and C. Also, inside of this wave, we are going to have the B wave will also put in its own three-wave structure labeled A, B, and C. It is this C wave that is now stretching the limits of what I've been presenting. And now I'm going to go in and start adding some layers of Fibonacci so that we get an understanding of where we're coming down into. And still, this pattern is, yep, these are strong cells and they were fun to trade. So this questionable, but it turned out okay. It's not as clean. So again, challenges. We came into support. We came down to where this C wave is already equal and above, I believe, the A wave. But now the entire move could stop right here, and it would be an A, a B, and they're flat. So A is formed, B begins, and goes back down to the start of wave A, flat. So if it stops here, we'd be looking for a C wave up, right? Remember, A, B, C for that minor 2. And that, again, is a counter trend move. So we still have that yet to do. And I cannot say with definitive, absolutely cannot happen, that no, it can happen. In fact, I would be looking for it. In fact, I'm not the only one, because each time they go down there, there's some reason that they find to come popping back up. So again, I'm going to go down. I'm going to go straight to the 15-minute. We're opening up. Let's take a look inside, right? There's the A wave. Yeah, pretty normal, right? It's not the cutest, but we got 5 waves down. And then we get this B wave. That's 3 legs. Now we're into what should be turning out to be 5. Look what happens in here. Right? This overnight, okay, we can take it as a wave 2. Now I'm looking for a wave 3. Okay, start, stop on a dime, rally all the way back up, and then try to put in new lows. It really is just ugly. So I drop it down. Actually, I drop it down to a line chart. Line chart, which is on a closing basis. So we get the A, we get the B, which should not be. Maybe that B should then be over there. All right. If I look at it that way, what does that change? Kind of puts a 1, 2, 3, 4. Well, that's weird. But 1, 2, 3, everything turning into a triangle type pattern or a diagonal, possible. So, but we're not clear. This is not clear. This is crazy. But it fits in terms of it's within a corrective move. Trend would be 1, 2, 3, 4, 5. This is something different. Taking it back out here. Now I'm going to wrap. So what we have to work with is that we're still forming a C wave down to complete a minute B wave with the C wave rally still to come. Not a massive rally, but a rally that has the potential to take us back to 4,000. Now that's only 40 S&P points from here. Not a big deal. But the algorithms can get it done lickety split. So that's the other side of the coin. So that can get slipped in without a lot of well, there would be a lot of notice, but in terms of interference, but that's now slimming. So here we are. What do you want to call it? I'm still going to look for this C wave and count this as the completion point, possibly, of subminute wave C, minute wave B. 1, 2, we should rally. Now, having said that, please understand, it's got to go. This did go, but it just didn't have what I would want to see. I want to see that, but in reverse. I like this. That's going. This is kind of going. So we'll see, but it should go. Now let's wrap around some parameters. So I'm going to go back out to that hourly chart. And the first thing I want to put on is, let me open that up a little bit. Just the parameters for the wave 2. So coming off, we've now reached, that's the 100% mark. right there. And in fact, we dipped below it twice, not massively, but twice. And there was additional support, by the way, at 43, and that's as low as it got. So what we still have, 39.29, 39.18. And here, and that would cover wave B being an irregular B wave. In other words, going below the starting point of wave A. And so, yeah, it is possible and still get that rally. This is the thing. It still is going to hang on to an upside. Got to have it. Got to have it. Going to get it. So it's not clear. Now, if I look at the bonds, if I look at what's happening, then yeah, we shouldn't be here. So again, we look at and come up with it that this is being wrapped around single day, right? 0 DTE, 0 days to expiration options. So every day you come in anew and you can build a whole new position and you can push it to a certain point and that's where you get out. It settles in cash. It's convenient. And it's used pretty heavily. And it has an effect on what we do in our indexes. So based on that, could we go? Could we run? You betcha we can. Back on the hourly chart. These levels are possible. Even if I'm counting this 1, 2, and somehow this ends up being a 3rd, and a 4 and a 5, we could end up down there. If in other case, again, going back down and just taking a look at it, wrong one, taking a look at it on a line chart, there's the B, kind of weird, but there it is. 1, 2, wow. 3, 4, one more 5. We may have to go with it. So things are there. I got to let it play out. We still have to allow for this move and then another turn. So each time it's come down and reached support, it does turn like, oh, okay, that's holding very nicely. Boom, let's jump on. And then it would stop. This, Fed governor's talking. Hammer and a hammer and a hammer, all in a line. And then finally finishing it. It was crazy. One other thing I'm going to add in here, and I want to just open this up because this one's going to be a little bit more crowded, so we got to see some of the detail. I'm going to add one more layer. So we continue to look for what should this 5th wave look like? What should, or this downslope look like? And the best I can do is go here to here to here. That would be for this wave. If it's done, look what it did. It came in, that being the A, or the first wave, this being the 3rd wave, it equaled at 39.43, hit it on the nose. Hit it on the nose today, and then rallied. But now it's coming back down. So is that okay? Was that just wave 3? This is 4, and now we're putting in 5. As ugly as all that is, very possible. So could we drop one more time, but down below 39.43? Yes. Is it going to be likely now because OCRM, Salesforce had these great earnings? It's like, let me tell you something, folks. They didn't really blow the doors off. I'm sure they had some nice thing to say. And they talked about all this unrealized earnings that are still yet to come because I guess contractually and what they got going on. So they report and they jumped the stock, took it, just ran it right away. And in fact, right now it's 192, closed at 167. So will that have an effect on the S&P? Yep, it should. And the Dow. And by default, the NASDAQ. So, yeah, we could have stopped all right there. And now we just start to head up. But I'm going to leave open that it can come back down and get down to here. And all it takes is someone to start talking about interest rates and go over there. So that's a possibility. I'm going to take this off because I want to show if it does say, if I have to put that C here and I'm going to put the B underneath it, then what we're looking for is this thing to just go. Maybe that was the low. And again, we get another small failure. Very possible. And then we just start going. But that's the key. It has to just go. No wasting time. It just goes. And right now, they're not bidding it up. Okay, Globex opens in 6 minutes, and they're not bidding this up. So, any case, we'll see. Both scenarios still remain. Going up, it goes. And then we already have, for wave C, we're looking for a flat. So what am I looking for? Coming right back here. Maybe gets it up to 40, 35, I think it was. And how I'm going to get that one? I'm going to go, excuse me, out to the 4 hour. And I want to get that X wave. And I'm going to come up and do here to, well, no, I didn't need to go to the 4 hour. I just need to go to the hourly chart. I'm looking for this C wave. So I need to come back down, boom, boom, boom. No, I'm sorry. That just kind of went by. For the C wave, it's going to be compared to the A wave, and we're going to go from here to here, oops, and then it would be back down to, say, the bottom. So we still, you can see 40, 24, 40, 38, 40, 49. Can it do it? Yeah, I can do it. This is the thing, folks. It really can. When the powers that be and the trades are pointing in that direction and being pushed and the money's going over there, then that's what's going to happen. The index has to go. So yes, it's possible. And we've seen stranger things. The market can also be overpowered by what's going to be happening in the interest rates and the larger. And then that's where I feel like macro traders, when we talk about that, that's who's coming in. They're finally coming in to put on some positions, and they will take over the technical because they're moving equal amounts of large money. Okay, over in the NASDAQ, it's the same story. It truly is. We got the A, the B, and we're looking, is this the C wave? Now, let me get rid of this one. I'll put it back, but right now I want to get rid of it. So right now, all we really have on is for the minor wave 2. And that still projects to 12,255 if we get a C wave. Many are saying, oh, that this marked the end of minor wave 2. Yes, that's possible, but it would be extremely weak, and what would be coming should not be doing this. I mean, this works, but all this in between, no. This would suggest so much sell pressure that we're not getting this battle. It just dies. Even with that, it would just die. So we're seeing parts, but not enough. So I'm still leaving it as A. This is B. We're going to do C wave up. Now let's go down inside this one and see what it looks like, because it does get kind of ugly. There's the A, B, A, B, 1, 2, 3, 4. Yeah, I know, very compact. Down in a 5, got one more. This also came down, smacked it on the nose. 923. And this is support, and it got as low as 24.75. That's smacking it on the nose in my book. So could it be complete? Yeah, it could. This is a 15-minute chart, and it's still ugly. And what would they make that? 1, 2, and then we turn it around. Yeah, but now they don't like Tesla. So if they're going to take the sail and the wind out of Tesla's sails, well, Tesla carries a heavier weighting in the NASDAQ. Also a fair amount in the S&P as well. But Salesforce going to carry the Dow and the S&P for a little bit. So again, what's going to happen intraday? It will be a coin toss, but tradable, more than likely tradable. And that's when you truly, folks, you break it down, and I'm going to show you. You bring it down to a 2-minute chart, and that's about all you get to see. So you can follow your indicators. You can follow the Elliott. You can follow the fibs, and you can continue to put them in all the way down on a 2-minute chart, for sure. But there are other things that I use on a different, I trade through the NinjaTrader platform. So there's different things I can put on those charts that are not on these charts. Again, I'm going to go back out to that hourly chart. Let's start filling in blanks here if I need any. And what I may need is just what should this C wave look like? So I'm going to go from here to here to here. And again, we're coming right in. Let me do that. Bring it into focus here. 119.12, 11,912. Well, if they swing around and bring this back down, wow, they could smack into that. They could smack into 11,898 and still turn and go. Because remember that if I'm going to put in back, I'm adding layers here so that this is how I figure out what my counts are. So that's backwards. Put it there to there. So in this one, this shows me where if it becomes irregular. And then we got this down here, 11,861 to 51, 1.236. If it really gets going, through 1.382 is at 11,822. Is that possible? Yes. Can it still swing up? Yes. When I open this up, this is not impulsive. This is corrective in its entirety. Even though the trend is down, it's corrective. It's still part of a little bit larger move. And what would be on the other side of this? An additional rally like that. Back up. Right now, we're into it's going to be a flat. That means we go back up, but we don't really get above 12,171 or let alone 12,189. That would be perfectly flat. And then we stop. And then we begin a turn and a nosedive. But wave C could carry enough to drive us up to 12,255. Put in a slight new high, put a C up there, put the minor 2, and then it nosedives. So we're still waiting for the nosedive. We're still waiting for it to fall off the precipice of that cliff. Not happening. Something else comes in. Something else rescues it. Then it's 0 DTE. There are so many different reasons. What's got to sit out there, again, are the macro traders, but they only move when they get something fundamentally to move about. That continues to be interest rates, which is why we saw some position changing as these Fed governors came in. And what got moved out are the Fed funds. And I'm just going to quickly go over. This is going to be a little bit longer, but I think it's going to be worth your while. So here, got to take it out and take a look. It's just stair-stepping down. And those were pretty big moves. Actually, GQM by 3. That is the June contract on a weekly basis. It's been sliding lower. Started at 95, now it's at 94. That's a quarter of a point that it slid. In addition to setting itself up for the 50 basis point hike that's going to come. So that's basically what it's doing. So, but this is June. You can go all the way out and be looking at December, looking at September, when then you're going to start to see it's over 5.25%. So now you can go look at where we are now and then see where we're headed to, and then understand, why would you want to be buying equities? Why would you want to be stepping in where you're paying for something and you're borrowing the money to do it? It's going to cost you more, and it's going to continue to cost you more because inflation isn't stopping. And inflation isn't stopping because we've still got money to spend. So Fed's got its hands tied. In any case, we still, in the bonds, have a possibility where it can run up, turn, stop, run up, get back above 135, not get back above, go above 135, and complete an intermediate degree B wave. Okay? But if the bonds are going to do that, the equity markets will find a reason not to do what their call has got to be. So I think it's all got to happen first. And that would suggest that the bond market may come down and get towards its October lows. The 30, the 10, the 5, the 2 is kind of there. All right, so that's the big thing, because it's the 2 versus the 10. There's the October lows. Look where we are. This is the 2-year note. We're back at the October lows. If it can stop here, it still has a chance of running back up to where it was in January, and then beginning a much larger drop. So I'm not looking for a gigantic movement within interest rates via the 2-year note. If it starts breaking here, get out of the way, because it's going to put a whole different spin on what truly is happening with interest rates, the dollar, and debt. So heed the warnings, and we did start to see that. Now that's the 2-year note. Its counterpart that people compare it against for the yield curve inversion is the 10-year note. The 10-year note is sitting on that precipice. If it breaks here, the next stop would be back down to where it was in October, which is 4.25%. The Fed funds rate is basically staring us in the face, telling us that, well, that 4.25 on Fed funds may start to look like 5.25. It's continuing to invert. So, and not getting better. So in any case, if it stops here, then we got a chance of it going back to 116 or above. That would again then fuel a little bit in the equity markets. But right now I'm feeling that the equity markets will drop down complete. Again, I know this is a little bit longer than maybe I should, but I apologize. Complete the intermediate C wave and primary A, and then set itself up for a really nice counter trend rally, one that's probably going to look a little bit better than this, because it's going to start from a lower level and it should give us a good A wave up. A good boost up would be nice. So that's yet to come. So we'll wait and see. That's all I'm going to really talk about tonight. Our next update will be on Thursday, March the 2nd.